guys, welcome to Talking Money with Nosy, personal finance made simple. This video is about my August 2022 investments, but before I start investing, first of all, I want to talk about why I invest. As an investor, you should have answers to these 4 questions. Question number 1, why are you investing? Are you investing for your retirement? Are you investing for your young children's education? Are you investing for financial freedom or to build generational wealth, or a combination of these things? Question number 2, what do you want to achieve? Investing is a tool that helps you to achieve a specific goal. The stock market doesn't know your goals. You must know your goals before you start investing. Question number 3, when do you want to achieve your goals? Is it in 6 years, 10 years, 15 years, or even more into the future? Knowing how much time you have for investing informs how much risk you can or cannot afford to take. Question number 4, how much should you be investing every month in order to reach your goal or goals? A lot of people always ask me if it's okay to invest 200 Rand, 500 Rand, or 1,000 Rand a month. The answer to that question depends on what you want to achieve and when you want to achieve it. If you don't have goals, you're going to invest 200 Rand a month only to realize after 10 years that 200 Rand a month was not enough for the particular amount of money that you wanted at the end. The answers to these 4 questions are very important because they guide your investing behavior every month. If you don't have any reasons, goals, and timelines for investing, you might not invest enough, you might stop investing because you have nothing motivating you, and you might not achieve anything. Basically, you're like a traveler that doesn't know their destination, and it is very likely that you're going to be going nowhere slowly. Let me share my reasons for investing. Reason number 1, I invest in the stock market because I want to beat inflation over the long term. Inflation is a silent killer of your wealth. The current inflation rate in South Africa is 7.8%. That's quite high, guys. What this means is that the cost of goods and services in the past quarter rose by an average of 7.8%. If inflation continues to rise by 7.8% every year, it means after 11 years, you will pay slightly more than double for the same goods and services that you're buying today. Just to show you how inflation works, this is a box of milk. I know it's not 100 Rand, but let's just use 100 Rand for simplicity. And the inflation is 7.8%, meaning the prices go up by 7.8% every year. Okay, so year 1, 100 Rand. In year 2, you're going to be paying 107 Rand and 80 cents. In year 3, you're going to pay 116 Rand and 21 cents. In year 4, you're going to pay 125 Rand and 27 cents. In year 5, you're going to pay 135 Rand and 4 cents. In year 6, you're going to pay 145 Rand and 58 cents. Year 7, 156 Rand and 93 cents. In year 8, you're going to pay 169 Rand and 17 cents. In year 9, you're going to pay 182 Rand and 37 cents. In year 10, you're going to pay 196 Rand and 59 cents. And then finally, in year 11, you're going to pay 211 Rand and 93 cents. This is more than double the amount for the same milk. And guys, this is only milk. Think about other things like juice, bread, margarine, cooking oil, meat, fruits, vegetables, etc. The reason why I invest in the stock market is because over long periods of time, the stock market gives returns that are higher than inflation. This is important because in the future, the prices of goods and services will be much higher than today, and my money should grow at a higher rate. Otherwise, I'll be getting poorer and poorer with time. Reason number 2, I invest in the stock market because I want the income from my investments to eventually replace my salary. This is called financial freedom. Financial freedom is a point where you can survive purely on your investments without the need for a job. Financial freedom is very important to me because one day, whether I like it or not, whether you like it or not, in fact, I'm not going to be an employee forever. You are not going to be an employee forever. It's going to end. So how are you going to survive without a monthly salary? That's where your investments come in. Also, I'd like to become financially free before the age of 65 because becoming financially free at a younger age gives you control over your time while you still have the health and energy strategy to do what you want to do. Reason number 3, I invest in the stock market because I want to achieve my goal in the next 15 to 20 years. That's enough time for the stock market to grow my investments. Also, I calculated that if my investments grow by a modest 9% every year and I invest a minimum of 30% or more of my income every month, I will be able to reach my goal. Because I'm investing for the long term, my investment strategy involves buying and holding low-cost diversified dividend ETFs as well as some blue chip shares every single month, regardless of the state of the stock market. I don't try to wait for the perfect time to invest, because trying to time the market is nearly impossible, because nobody can accurately predict the future consistently over the long term. Some people may be able to time the market perfectly once, but they're going to struggle to do it consistently in the next 5, 10, 15 years, etc. And if you get your timing wrong, you can miss out on long-term growth. Investing regularly takes away emotion-driven investing and helps you to stay focused and disciplined. Another thing that I do is that whenever I receive dividends from my ETFs and shares, I reinvest all those dividends by buying the same shares or ETFs. I do this so that my investments can compound in growth, where the value of my investments go up over time and the dividend payments grow larger and larger because the shares are becoming more and more and more. Guys, there are no shortcuts when it comes to investing. Investing needs focus, patience, discipline, consistency, and time. With that said, let's get into my August 2022 investments. Here we go, guys. I've logged into the Easy Equities website. Time for me to invest. Again, I'm investing in my Easy Equities US dollar account. I'm going to click on the account, and currently I have $832.96 waiting for me to invest. Let me click on overview, then you'll see what's going on with my account. So currently it's down minus 3.37%, not bad. And you can see that it says US ETFs, the distribution is 46%, and equities is 26%, and the funds is 27%. So I always have more ETFs than individual shares, which are equities. So here are my holdings. As you can see, I've got a lot of holdings, guys, but most of my money is allocated to ETFs. So I've got Google, Apple, BlackRock, Caterpillar, Coca-Cola, Intel, Johnson & Johnson, JP Morgan and Chase, Lockheed Martin, Lowe's, Microsoft, PepsiCo, Pfizer, Procter & Gamble, Charles Schwab, T. Rowe Price, Target, Texas Instruments, US Total Stock, Verizon, and Visa. So what I'm going to start with, I always start with my ETFs. As you can see, my ETFs have got the highest allocation in terms of the money that I invest. So I'll start with this one, Charles Schwab. I just click on buy more. So I've already decided upfront how much I will invest in my ETFs. For this one, I'm investing $300 worth, which is about 4.04 ETFs. This ETF is a dividend ETF. It's got about 100 dividend paying companies within the ETF. I love it because it's an easy way to earn dividends stress-free. I don't have to watch the news or do any research about stocks. I'll choose the second option right here and place my buy order back to my portfolio. And I'm going to invest in my second ETF, which is this one, Vanguard US Total Stock. Click on buy more. So this ETF, I absolutely love it. It represents more than 4,000 shares on the American stock market. Basically, by just buying this ETF, I'm literally buying almost the entire American stock market. It performs well over the long term. Currently, it's down, and I'm actually happy. When investments go down, I don't run away scared like what some people do. I actually love it because I'm getting a discount. Over the past year, it's actually down by negative 12.93%. So I'm buying it at a bargain, right? So how much I'm gonna put in there is 272. That's going to give me 1.33 shares, and I'm going to choose the second option and then place buy order. Let's go to account overview. I actually wrote which shares I'm going to buy in advance. I already pre-made the decision. All I'm doing is just executing. The next shares that I'm buying, it's Google. Obviously, Google is down and I'm going to pick up more. This is a good quality company. Investors are just overreacting for no reason. Actually, I'm going to start with T. Rowe Price. So what is T. Rowe Price? T. Rowe Price is an asset manager. They manage assets on behalf of people. They manage people's retirement funds. They manage people's unit trusts. In America, they are called mutual funds, right? And currently it's down because in a bear market, which is what we're currently in right now, when the market goes down, you know what people do? People stop investing. They withdraw their pension funds. They withdraw their unit trust. They sell their investments. So obviously a company that manages investments would suffer in a market downturn. But me, because I'm a bargain hunter, this is the perfect time for me to invest in T. Rowe Price, because when the market starts to recover, guess what people are going to do? They're going to flock back into the market. They're going to start contributing to their retirement funds again. They're going to start buying the mutual funds again. So the price is going to grow and go up again. How much am I buying of that? I'm actually buying $40 worth of T. Rowe Price. Let's buy that. 0.3345. Place buy order. The next company that I'm buying is BlackRock. Account overview. BlackRock. Buy more. What is BlackRock? BlackRock is the second largest asset manager in the world. So the largest asset manager is Vanguard, but unfortunately Vanguard is not listed on the stock market as a public company. BlackRock is number 2 in terms of asset management. They've got more than $8 trillion under its management. They make ETFs, they provide advice, etc. I love it because ETFs are the future. Some of the popular ETFs that are on the stock market are made by BlackRock, and as more investors are piling into ETFs and passively managed funds, BlackRock is going to benefit from that. So I'm also going to buy $40 worth of BlackRock. Again, BlackRock also suffered a downturn for the same reason. When the market goes down, people stop investing, people withdraw their investments. But I can tell you now, once the market starts to recover, people are going to go back into investments. Because I'm a long-term investor, I don't mind short-term downturns. Only buy at ask and then place buy order. The next share that I'm buying, account overview, holdings, Caterpillar. I love Caterpillar. It's a dividend aristocrat, meaning they've been paying dividends for the past 25 years or more. Caterpillar manufactures farming machinery, construction, mining machinery. You guys know those yellow trucks that dig holes in the ground and those yellow cranes when there's construction going on. It's a very familiar company. This is one of the least talked about companies. I mean, when people are investing, they always go for the exciting technology companies. This is a solid company, guys. It's been around for years and years and years, and they supply key sectors of the economy with strong equipment. Let's see how it's done for the past year. I think it's down slightly by 9%. Again, it's selling at a discount. I'm picking up good companies at a cheaper price. I'm going to buy $30 worth of Caterpillar shares. Place buy order. Let's go and buy the next share, which is going to be Google. I just love Google, guys. I think it's the largest holding in my portfolio in terms of shares. Buy more. Google is down 24% for the year. This is absolutely crazy. This company is a giant. It's the biggest search engine in the world. I could say the biggest advertising company in the world as well. It has got Google Maps, Android, it's got YouTube. I mean, it's crazy for people to let this company go. But anyway, those of us who are bargain hunters, we are buying good quality companies at low prices. So for Google, I'm going to just buy $20 because I mean, I don't want to be overweight in one share. That's also not a good idea. So because Google currently is my highest holding, I'm not going to buy too much of it. Then the next share that I'm going to buy is Microsoft. Let's go to holdings. You'll see that Microsoft is down also. Very happy that it's down. You know, when people see their shares going down, they get sad. I get excited. I get happy. Buy more of Microsoft. These companies, Microsoft and Google, don't need introduction. I don't think there's anybody who doesn't know who Google is and who Microsoft is. Microsoft sells licenses. They offer cloud services, gaming, software. I also buy $20 worth of Microsoft and only buy at ask, place my buy order. Next, I'm buying Target. Let me click on buy more. Target for the year is down 36%. This is because Target missed its earnings estimates. So companies that are on the stock market, they always project what they think they're going to make in the following quarter in terms of revenue and stuff. And then Target missed the mark. So they said they're going to make X amount of money and they made much less than that. And then of course, they were punished by the stock market and the stock went down. This is a bargain for me because Target sells essentials. It's a retail store. So they sell food, they sell electronics, beauty products. It's just like Pick n Pay or ShopRite here in South Africa. There's no reason why it should be down 36%. But I'm not complaining. Of course, the bargain hunter is going to pick up good quality shares at discount prices. So because I also have a very high allocation to Target, I'm not going to buy much. $15 will be fine for now. Place buy order. Guys, I wish I had more money. Trust me, I would be investing by the truckloads because the bargains are crazy. Even choosing is hard because there's so much on sale. Then next, I'm buying JP Morgan and Chase. What is JP Morgan and Chase? This is the biggest bank in America. Again, banks always struggle. Whenever there's a fear of recession, wherever there's interest rate hikes, banks always suffer the brunt of that. You can see it's down 28% for the year. Bargain, bargain, bargain. So I'm gonna pick it up for $15 and place buy order. Yo, my funds are dwindling now. Next, I'm going to buy Lowe's. Account overview. All these companies are solid companies. So Lowe's is a home improvement store. Much like builders here in South Africa, they distribute building materials and supplies for home decor, maintenance, repair, remodeling, property maintenance, etc. Again, let's see how far it's down. Okay, well, it's starting to pick up. It was down quite a bit earlier this year, but it's starting to pick up a bit. And I'm going to grab some shares before it takes off for real. So I'm going to buy $20 worth of Lowe's, place buy order. Let's see how much I've got left. I'm left with $60.96. Now let me see what's in my watch list, because I've got several companies in my watch list. I haven't decided which one to buy. So today I made the decision that I'm either going to buy Home Depot, which is another home improvement store just like Lowe's. It's a competitor to Lowe's, very good in terms of growth and dividends. Then there's this one, United Parcel Service. This one's a delivery company. They deliver parcels in America and all over the world. So I am actually stuck on which one to buy. I can either buy this UPS, United Parcel Service, or I'm going to buy Home Depot. You know what? Because Home Depot is slightly down, let's see UPS. Okay, I'm going to buy Home Depot. I'm going to buy it for the entire $60.96. Place buy order. Those are my investments done for the month. As you can see, as I've been buying, my losses have reduced a bit, but I'm not worried about this because I'm a long-term investor, so it doesn't bother me. Let's see the pending orders that haven't executed yet. Oh, okay, couple of pending orders. Yeah, the market has been a little bit volatile today. Prices have been going up and down like all over the place, so that's why these orders have not yet executed. I'll leave them as they are, and they'll execute when the time is right for them. So yeah. Alright guys, that's it for today. If you want to start investing and you need my guidance, please go to my online store and get yourself copies of my ebooks for beginner investments. Or if you like, you can book an online coaching session with me and I'll guide you through it. I'm going to type the link to my online store in the description below. Also, please remember to like this video and subscribe to my channel. Until next time, bye guys.